All right, so Bitcoin breaking 30K. This, of course, has a lot of potential impact on the market at large and how all of this is shaking out. There's a lot of mixed signals here. We're going to try to break through that all today. You guys are going to love it. My name is Paul Barron. Welcome back into Tech Path. Let's jump over to one event that's happening right now. There's so many things happening right now, pretty much all at the same time, it feels like. Jim Jordan fails to win the House again. This is the third vote. Jordan is not giving this up. Remember, McCarthy, it took, I think, 15 rounds to get him certified into the speaker role. The question is whether or not there's a lot of people that do not want Jordan in. Obviously, he is not necessarily I won't say he's a positive crypto, but he has no opinion. But the other scenario that could play into this is we could see someone that is pro-crypto still. So you got a couple of people that have jumped ship, and that is Don Bacon, voted for McHenry. Lori Chavez DeRamer also voted for McHenry. Brian Fitzpatrick flipped over to McHenry. This is a new vote against Jordan. And then McCarthy, Jennifer Kiggins also voted for McHenry. Mike Lawler, which we knew about earlier in the week. And then Marianne Miller Meeks also for McHenry. So there's some new people within the Republicans now starting to put McHenry up at the top of the list here. Whether we see Jordan or McHenry jump in, McHenry would be very positive for crypto. He obviously, in support of the bills there in the House, most likely would get them through before these sessions close out and possibly get us some legislation before the end of the year. We'll see how that all comes together. Here, I want to jump over to a clip from CNBC, and this was with Powell, and many of you have probably seen some of this, but I just want to play this clip real quick.
So no, I don't think that there's a fundamental shift in the way that interest rates affect the economy. There may be some differences in this cycle because of what I mentioned. As I mentioned, we are seeing the effects where we expect to see them, which is interest-sensitive spending and also asset prices to some extent, and the exchange rate, which you're also seeing a strong exchange rate, which is disinflationary. So I don't think there's a fundamental change in the way monetary policy affects the economy. And again, it goes back to just very strong demand. We take the economy as it is. We take fiscal policy and the economy and all the things we don't control. They come to us, and we conduct policy always to achieve maximum employment and stable prices. So we just take what comes. The fact that we have a strong growing economy, a strong growing labor market, and inflation coming down, these are the elements that we want to see that to achieve the outcome we want.
So I'm going to pause it there. I mean, because he feels to me like there's a little bit of doublespeak there in the sense that there's still pressure from the Fed to continue higher for longer and also to try to achieve the 2% in terms of an inflation target. But at the same time, they're still saying, hey, these things are still happening in the economy, when clearly that is not necessarily the case. We are seeing problems in the economy that are running up against us, and that's including job numbers, including the crackdown on credit, including the situation with what we've seen on mortgage-backed securities. We are going to see a lot of implosion yet to come. And I think this is the thing that plays out. You look at a couple more tweets, and this is where it gets confusing, I think, and then everybody's kind of in the same boat. Here's Kobe Easy talking about it. Stocks are falling like a recession is coming. Home prices are rising like there's no recession, with an 8% mortgage, by the way. Bonds are falling like the Fed is raising rates. Gold is rising like the Fed is cutting rates. And then you have oil prices rising like a major war is coming. That is very possible. And then tech stocks rising like there's no problem at all. So nothing really adds up. I agree that this is something we've talked about for, I'd say, the last year, is that some of these things just don't make sense with what we've seen in this cycle. And remember that we've been on a run for many, many years, well over that cycle of a 7-year cycle before you see recessions. We're into 15 plus years now. And when you look back really at the last true recession in 2008, I mean, sure, you could say the 2020 time was a slight one and maybe 22, but that was induced. The scenario, we'll get into what kind of impressions or issues hit the markets to cause this to maybe shift in another direction, including a shift down. This was Gareth Soloway kind of hitting on what I think is pretty close right here. Gold hitting resistance at about 1985, big level. Stock market hanging by a thread with a crisis on the horizon. Yields continue higher. All that we know. And Powell, of course, willing to break something, but history shows Fed won't be able to fix it until a crisis causes an epic meltdown. That's the question mark right now, is what is that black swan is it a war? Is it something happening in the job market? Do we see enough pressure from inflation and or credit crisis that could occur that really starts all of this to create that domino effect? The problem is there hasn't been major movement. It's in these little steps toward what many people have said is that we're still not out of the woods yet. However, with all of that happening, Bitcoin is outperforming everything. Traditional finance assets in 2023, Bitcoin is smoking the competition. As high as 30,002 on October 20th, this Friday, moves markets to another orange correlation is the question mark. Whether we see it break away from traditional stock market, we'll see. And then right now about 79% and 34% accumulated gains on year to date versus Bitcoin and Ethereum. That number is one to pay attention to. Let me zoom in on this chart right here, because this gets you pretty jazzed if you're a Bitcoiner right now. Almost 80% up, and that's at where we at currently year to date from the beginning of the year. And then Ethereum struggling to keep pace at only 35%. And then you see some of the other assets, gold sliding up as 26% gain. I'm sure Peter Schiff will be happy about that versus NASDAQ and the SPY. So a lot of traditional finance assets not performing at the pace in which we've seen these risk assets perform. Do we see a structure here where we get that adjustment? Many traders, many analysts still believe that could occur. However, many people are also looking at a short-term pump if we do get an ETF. So there's a lot still yet to determine. Watcher Guru says, just in, SEC drops lawsuit against Ripple. Some people think this is one of the things that caused this pump, even though I do not believe that. This was the only thing. I think these are a cumulative effect on what's been happening overall from a global macro standpoint, obviously what we're seeing in terms of conflicts. And then you have things like what's happening in China right here. You know, right here is Vail Share Cap. This, of course, Dr. Bear. If you have your reasons, I have mine. Meaningful moves are always driven by liquidity. And the PBOC injects, this is basically China, injects a record amount of liquidity overnight. Remember, there's been another major real estate failure in China. This is one of the big challenges past the Evergrande debacle that has occurred already, which has caused liquidity and also not a lot of trust in the financial system in China. So this is another factor that plays in it when you inject liquidity. Much like if this happened in the United States. Think about this, major bank failures, someone like a Blackrock or a Van Eck having troubles, those would create massive unrest within the population. That's the kind of thing that's happening right now in China. Zero hedge comes in when oil, gold, and Bitcoin are all flights of safety. Something is about to crack. That's a question. I don't know. I look at this. Yes, I agree with that there's a lot of pressure from the macro side of things. There's a lot of unrest, you know, from when you look at conflicts around the globe. And you also look at these cycles. So that's another factor that plays into it. All of this is a very interesting time. Listen, we're living in a very interesting time. There are going to be some people that are being made millionaires in this run or billionaires in this next run. We are going to see that kind of impact. The other thing I want to hit on, here's Van Eck saying, well, hey, if a spot gets done, you know, in terms of an ETF and it gets approved, I'm going to zoom in on that for you guys a little bit so you can see it. What would you do? Would you buy it or not? Most people are saying, when I say most, almost 60% saying yes, but there's a lot of people here also saying no, which tells me that there's a lot of people out there that are still in the market that is for the direct asset. Now this, remember a spot, yes, that is direct asset as well, but it's a little bit different in the sense that I think it goes after maybe investors who are not necessarily they're crypto curious or they're just getting into crypto for the first time. But I have a feeling that will start to create them to quickly move into the markets on exchanges to buy Bitcoin directly and other assets, which I think altcoins will be one of the big winners here as we start to see these markets start to shift. We're going to play a few clips here from Dan Tapiero. And this was one with Larry Fink and the ETF. Listen in.
The Larry Fink turn for, I would say, institutional investors was very important. Do not underestimate that. 2 years ago, he was very clear. He said, Bitcoin is a fraud. It's for money laundering or whatever it was. And we're thinking, oh my gosh, how could he say that? 2 years later, he says Bitcoin is a global asset and he wants the ETF.
Yeah.
So I would not underestimate the importance of that switch and those comments to, let's just say, US institutional capital, but also I think global capital. He's, it's a 10 trillion asset manager, very well respected. And it seems like every few months we get another turn like that. Some guy who was a naysayer turns somehow.
Yeah.
I mean, even Dalio, to a certain extent, is also kind of repositioned into risk assets. So the fact that we've already seen Wall Street at its best with the big players such as Fink already spinning. And remember, there was a very interesting flip with Fink, and that was the ESG issue that, of course, would play against the potential of a Bitcoin ETF. Because remember, so he obviously sees, meaning Larry Fink, obviously sees the future here, not in ESG, but in what we will see, and that is risk assets going forward, and a lot of what we're going to see around just crypto in general. Let me play another clip for you guys. This is Tapiero also talking about the sector in general. Listen in.
I just wanted a bet on the sector.
Right.
And that was, so for a traditional macro guy, I built a sector bet. And it's a portfolio, as I said, of 24 businesses now, 1.2 billion. And we really are in the middle of this ecosystem, this growth stage.
Yeah.
So it was, you asked me the question, how did it happen? Well, it happened slowly and then all at once. And then I put down everything. I got rid of everything I had in the traditional world. I don't have really much exposure in the old world anymore.
Wow.
Once you see the upside potential and how big the TAM, the total addressable market of this space is, everything else is really dull. I mean, bonds and currencies, moving 10 or 20%, who cares? This is this will be eventually a restructuring of how human beings interact with value. I mean, that's pretty big.
Listen, I know everybody watching our channel, you already are drinking the Kool-Aid, most likely. But if you're new to the channel, this is probably an eye-opener for you. You're probably saying, wait a minute, what's about to change? Well, what Tapiero is referring to is really kind of shift of everything, whether it's tokenized securities, whether it's a blow-up of how we see entertainment in the NFT space, it's a blow-up on what we'll see in terms of projects starting to come out, and a reinvention of the internet. So all of that is interesting because it's happening now, and it's happening at a pace. I think I would disagree with him on the sense that kind of slowly and then all at once. I don't think we've seen the all at once yet. Yes, it's growing, but it's still under $1 trillion market cap in a suppressed bear market. So we're not really seeing the all at once yet, but we will. And that's the key that I think he is alluding to. Lots of going on there. Let me jump over to this last clip. Actually, I have a couple more clips by him, but one on tokenized assets.
Even this concept of tokenizing real world assets, RWAs, which has now become a little bit, has been growing a little more in vogue in the last 6 months, is still, we went from $100 million of assets tokenized to now 800 million in a few months. But it's 800 million.
Yeah.
There are hundreds of trillions of dollars worth of assets. So, and then you look at something like the stablecoin market, which literally 3 years ago was zero.
Yeah.
Okay. And last year, in 2022, you had $8 trillion of stablecoins settled. 8 trillion. Now, what in the traditional world goes from 0 to 8 trillion in 3 years? At some point in the future, all things of value will sit on a blockchain and be in the digital asset ecosystem. Mm-hmm. And so that is something, a vision that's beyond just Bitcoin for payments, which is for 6, 7, 8 years. That's what people were focused on. I don't think anyone would have imagined how big and how fast things have grown.
All right, so he's hitting on a lot, but when he says, the 8 trillion number, that's the amount of settlement, not the market cap. So just be aware of that. The market is still nascent, very, very small. And the opportunity here is drastic in terms of what we will see in the future. Just to show you, this is a video we did the other day, which, by the way, if you guys have not seen this video, go over and search Tokenized Assets, Explosive Growth, and you'll start to see the picture. This chart that was on this video that I've still framed here, right here, you're going to see something within it, if I can zoom in on it a little bit. Yeah. So there's a couple of things within this that really are important, and that is this adoption curve that starts to occur all the way back in 2017 through where we are during the crash. The crash meaning after the Bitcoin all-time high, market started to crash, now we're in the bear market, and we look at what they call recomposition, which is the turning point. This happens in all markets. It especially happens in the cycle of technological innovation. And that's the thing that we're in right now. Technological innovation, major shifts. It happens and has happened multiple times. It happened in the dot bomb. It happened in the mobile era, and it happened in the social era. Those were microbes compared to what we're going to be dealing with in this market for sure. Solana is flying right now, and Solana's price prediction bullish pattern plays hints on a slow recovery to extend about 20% more. This would be pretty cool because it's happening at a period of time where breakpoint is going to happen. A breakpoint is the Solana Super Bowl. It's where we're going to see all sorts of things going on within the Solana ecosystem in terms of advancements, feature sets, all those types of things that will set the course on what is the future for Solana. Here was Circle talking about this. This year's Breakpoint 2023 will be one to remember because cross-chain transfer protocol is now available on DevNet for Solana. And this gets back into it. Circle, remember, ERC connected to ETH in a big way, now with cross-chain on Solana. A lot of opportunity here with Circle because Circle, of course, will be one of the major players in the market, and they're making the statement of this will be one to remember. Here, of course, Bitcoin holding on the 4-hour right now at 29.4. We'll take a look at ETH also up and holding right around 1608 at time of recording here. But Solana has been the one that has really moved just in a short period of time. Let's take a look here just since the 13th of October, last Friday. And where are we now? We are up 26% on Solana, so a pretty significant move. Question is will it go to plus 30 with everything that is happening around not only Bitcoin, but also around Breakpoint and obviously the ETF, which will play into this. Many of these things are coinciding all at once, as I said earlier in the video. All this happening, guys. Love to get your feedback. Drop some comments down below. We always love to hear what you guys have to say. If you're not in our Diamond Circle, make sure and get in. It's pretty simple. Just click the link down there. We have additional content, more podcasts, more TA videos, all sorts of cool stuff that you can't get here on the YouTube channel. So join the Diamond Circle. That's our Substack. If you don't know it, go to pbn3.substack, and you'll find a whole new wonderland of stuff over there. So check it out. And of course, if you want to hit me on X, it's @PaulBaron. Catch you next time right here on TechPath.